look, I don't guarantee that you can become successful with a trading plan. I don't guarantee that. I almost can guarantee that you will fail if you don't have a plan. Okay? So I took it upon myself to show you, to share with you how to write a trading plan, because it's a kind of an ambiguous topic that not a lot of people talk about, even the ones that know how to do it. And I really struggled in the beginning when I tried to put together a trading plan, really struggled to figure out what I needed to talk about. So it took me 4 months just to get started because I didn't know what I was supposed to address in my trading plan. So I'm gonna show you all the different sections that need to be addressed in the trading plan. Okay, so let's get started. I think you should be able to see my PDF, right? Mike, are they able to see my PDF?
You're all good.
All right, wonderful. So I got 2 goals for today, right? First, I want to share with you 2 mistakes. We're going to go over with you 2 main issues that may be holding you back, okay? That I had to learn the hard way myself. And then the other thing is today's topic. We want to learn to create a trading plan. What are the different elements that go into it? How to do it actually? So let's get started. I want to first tell you what happened with me in 2007, I think, when I really went full time. I started trading in 2005 on a part-time basis, and I went full time. Quit my job, went full time in 2007, and of course the market tanked, which is why to this day I think it's the main reason why I like to short more than to play long, because when I started, the market was just bearish for 2 years almost, because we didn't bottom until March of 2009. So okay, Radio Shack to me was the most obvious stock to short. I thought it was outdated, overpriced. The 3-4 stores that we had in the area where I lived, I never saw anybody walk in. They were always empty, pretty much. And so I thought this has got to be, an easy short, especially since we were turning bearish. And this is the Radio Shack chart in 2007. As you can see, does that chart look bearish to you? Uptrending, okay? So I believed Radio Shack had to fail, but the chart was clearly bullish. Yet I still thought the stock had to go down, a false belief, right? And then eventually in 2014, end of 2013, beginning of 2014, the stock did go to zero basically. And then at 80 cents at Interactive Brokers, you can actually short penny stocks. A lot of other brokers you can't, but at Interactive Brokers, they have everything available. I actually went short Radio Shack, RSH, at 80 cents, thinking for sure this is it. And I went heavy because I thought, okay, it's at 80 cents, where's it? And it's headed to bankruptcy, for sure it's going to zero. Only if a couple weeks later to see it triple off the lows, triple. So if I had to cover my position. If I didn't, I'd have gotten smoked, okay? The thing that you need to keep in mind is your preconceived beliefs and notions about what should happen should be tossed out the window. They should, you can be the smartest guy in the world, but if you come to trading with preconceived ideas about what should happen, what shouldn't happen, you will lose your shirt. Guaranteed. And so this is important for somebody who's new, especially if you've had a successful career, especially if it had to do with finance, because you probably came to the market with a lot of ideas, a lot of things based on your past success, based on the industry that you came from. You think you know what's good, what's not good, but you know what? That shouldn't really have any bearing on what you should do as a trader. What we should do as traders should be 100% based on what the market is telling us, what price action is telling us. If something is bullish, we want to be bullish, regardless of the story. Again, Radio Shack, the story was dreadful, but the stock in 2007 doubled, right? So always keep that in mind, that you should completely do away with any kind of notions about what should happen or what shouldn't happen. Look at Tesla. How many people got burned shorting it over the years because they thought, well, Tesla loses $1 million per car. They used to lose about $1 million per car, and so there's no way that they're gonna make it, right? Now it's the 5th largest company in the US and probably top 10 for sure worldwide. So yeah, you have to keep that in mind. That's the first thing that you really need to understand and agree with and believe. The second thing is you have to trade in a way that suits your personality. We all know that there's many ways to trade, 1,000 ways to skin a cat, right? But the issue is, how do you want to approach it? What is it that actually suits your personality? Okay? And people think, okay, if I just learn these chart patterns, well, I invite you to Google them. They're on the internet for free. Here's 16 of them for free for you to look at. Are they going to make you money? Not really, unless some of these chart patterns agree with your psychology, with who you are as a person, as a trader. Then you can maybe utilize them in your trading. If you're in the room with me, or if you've studied the methodology that I teach, I talk about gaps. Should you trade gaps? I talk about climactics. Should you play climactics? Breakouts, pullbacks, 1, 2, 3 continuation patterns. I just talked about these this afternoon on the microphone in the room. Bull bear trap plays, shakeouts, scalps, level 2 plays, late day breakouts, LDBO. Should you focus on day trading, swing trading, trading earnings? Which of these strategies really make sense for you? Based on what? Based on your own psychology, your own personality. And I learned this from market wizards. Jack Schwager said, he gave a talk one time that I attended, and said, if you take anything out of the stock, if you take nothing out of the stock but just this one thing, then it was well worth your time attending tonight. And he said, this guy, I don't know if you know his story, Jack Schwager, he was a struggling trader. He never got his account to above $100,000. He just couldn't. So he decided to interview the world's best traders, literally the world's best traders at the time, thinking that they all traded similarly. They all did the same exact thing. That's what he thought. And he wanted to learn that strategy that they all traded, and only to realize that not 2 of them traded alike. They all traded differently, but they all traded in line with their own natural personality. So he said, in order to succeed, you have to trade in line with your own natural personality. And if you get nothing out of my book but just this one concept, then it was well worth your time. And he said, when you trade with your personality, in line with your own natural personality, were his exact words. He said, it's like in trading as an archer. If there's effort, force, straining, struggling, or trying, it's wrong. The same in trading. If there's effort, force, straining, struggling, or trying, it's wrong. There has to be some kind of a flow to it. So you have to figure out what it is that you like to do. Do you like to go with the trend? Do you like to scalp? Do you like to hold all day? Do you like to day trade, swing trade? This is a big concept, okay? And it took me a while to figure out how to trade in a way that actually suits me. And once I did, I promise you, I never ever deviated from it. And whenever I did, it was just because I was upset and I revenge traded or something like this. It was just a mistake. But I never ever deviated from that style of trading, which is I only trade the things that suit my personality. Okay? 3 day trading strategies, 8 swing trading strategies, and 1 earning strategy. and that's it. That's all I do. So you have to play to your individual strengths. You have to trade in a way, again, that suits you. And that's this idea is the foundation of my trading plan, which I'm going to share with you in the next few minutes. Market Wizards inspired me to explore my personality and match my trading to it. Here's why most people are terrified to write a trading plan. First, things suddenly get real. Now you have to hold yourself accountable, right? When things don't go well, we don't want to really take responsibility. Nobody likes their nose rubbed in their face. So we don't want to take responsibility. We just want to walk away, right? But when you have a trading plan that tells you exactly what you can and can't do, then you don't really have a choice but to take responsibility. Taking responsibility, getting your ego bruised, is painful for sure, okay? But it's also part of the growth process. If you always walk away from it, it's not a pleasant feeling. But if you always walk away from it, you will never grow as a trader. You will never grow as a person also. If you always walk away from things in your life that need to be dealt with, but you don't want to because your ego is going to get bruised. Okay, that you're going to have to admit you were wrong, or you're going to have to change course. So the same in trading. Life and living and is almost synonymous with trading. I learned so much about living and the art of living and how to live a better life by just being a trader. Even though I used to read a lot of books, that's how I learned English as a fourth language, from reading 2,000 books when I first came to the country. I learned probably more from trading about myself and about life and living than I did from all the books that I ever read. Okay, and it's true. It's the truth. So push yourself. You have to push yourself and get started. The hardest thing about writing a trading plan is getting started, because a lot of people feel overwhelmed, like I did. With like, where do I start? What do I talk about? Okay, I'm going to show you what to address, what to talk about, but the most important thing is for you to actually get started. Okay, just start anywhere you want. I'll show you the different sections that need to be addressed, but you need to get started. That's the most important thing. Because when I was going to school, to college, as I said, I learned English as a fourth language. I didn't really like writing essays when I first came here. It was very, very hard for me. So I would keep rationalizing why I couldn't start today and that I would start tomorrow on the essay. And then sure enough, the day before I was supposed to turn it in, that's when I had to pull an all-nighter to write the damn thing, because I kept delaying, procrastinating, because I didn't want to deal with it. And the same with trading plans. I feel, that a lot of people just procrastinate because they don't want to deal with them. Okay. So a plan is truly, as I said, I almost can guarantee that you will fail if you don't have a trading plan that tells you what you can and should do and what you can't do, shouldn't do, that sort of thing. That specifies exactly how you should go about your day, what patterns you should do, how you should play them, how you should manage them. If you don't have that, then you're basically trading randomly. And people love to trade randomly because they don't want to be held accountable. Does that make sense? That's why some people like to gamble, because they know you can't hold yourself accountable. It's just luck. Okay? And so they become compulsive gamblers. But in trading, you can actually hold yourself accountable if you have a trading plan. A plan, again, allows you to move forward systematically, allows you to figure out what's working and do more of it, and figure out what's not working and eliminate it. It's the only way to really boost your P&L in the long term. Okay. Now you're going to get the short version of my own actual trading plan. You can use it as a template to write your own trading plan. Initially, again, don't feel overwhelmed that you have to address or talk about every section that I'm going to share with you here. Be conservative to start, and then set modest goals, and then easy to follow rules. Don't overwhelm yourself with too many rules. I used to be a perfectionist, and to some extent I am still. It's the worst thing for trading. You can't be a perfectionist. I used to have way too many rules. You're not going to be able to follow them, okay, during the day. So you have to come up with very simple rules that really are kind of instinctive or intuitive, not intuitive. That makes sense. So you're not forcing yourself to do something that's not natural to you. Okay. In fact, I don't really have a section in my entire trading plan that says rules. Like, I have a section that has in the glossary, I mean in the appendix, like reminders at the bottom there. Let me get this out of the way. But I don't even have a section that says rules, because every section of my trading plan has its own rules and guidelines, so to speak. It's a standalone section, so that if you pull it out of the trading plan, it actually makes sense. It should make sense. So here are the different subjects or topics that need to be addressed. First, your goals and objectives. What are your goals? Are you just going to trade every day aimlessly and not evaluate your trading, or are you working towards certain metrics? What are your goals and objectives? And goals are the big goals. Objectives are the little things that I have to achieve in order to reach my big goal, so to speak. And I'll go over that in a minute. Money and risk management. We'll go over that section also. But basically, this is what keeps the account safe, right? At what point will you, for example, take profit, right? At what point will you call it quits for the day, for the week, for the month? Can you just continue to trade? I had a student one time who was risking $50 per trade, meaning very little, $50 per trade, and ended up losing, I think, $67,000 on a trade, because he kept just adding to it. And it was supposed to be a day trade, and he turned it into a swing trade. And then by the next day, he had 18,000 shares. You see what I mean? So if you have to have money and risk management rules that tell you when you have to quit. No ifs, buts, or ands about it, okay? Then I have a section that addresses the entry requirements, okay? The entry tactics. What are the entry tactics that I use? And then the bulk of the trading plan is made up of these three strategies. A gap strategy, which I use for the morning session, especially the open. A 15-minute strategy to play certain chart patterns off the 15-minute chart. And why did I pick the 15-minute chart? Because it's not too small of a time frame, but it's not too large of a time frame either. It's the perfect time frame for the afternoon. The 1, the 2, the 5-minute, those are too small. Those time frames are way too small for the afternoon. They don't, stops and patterns don't really hold on those time frames later in the day. And then the 30-minute time frame, the hourly time frame, that's too large of it. Those are too large of time frames. So the 15 for me is perfect. So I have an AM strategy, a PM strategy, and a strategy, the climactic buy setup, climactic sell setup, is for late morning, early afternoon. Does that make sense? So I figured out a way to kind of trade the entire day if I want to, with just 3 strategies that suit my personality, okay? And then I have a glossary that basically includes a definition of all the terms and adjectives that I used in the trading plan. Anything descriptive, any adjective should be defined, so that it's not up to you during the day to define what a strong stock is, or what strong support is, or what a deep retracement means, or what a, whatever, fill in the blank. So I have a glossary that kind of defines that, and you don't need to memorize it. This is for you to just work on, and I will, some of you have received a copy of my trading plan, but the truth is, if you don't work on it yourself, it's not the same. The most important thing is the process that you go through when you write a trading plan. That's what's really important. Once I finished writing my trading plan and I was finally satisfied with it. It took me about 2 years. It went into the closet, so to speak, and I never had to look at it again because it was in here. So again, the process that you go through when you write a trading plan is really, really important. And then I have, those are the page numbers, right? Page 3, page 4. And then at the end there, I have some notes, just psychology notes, technical analysis notes, and things that I like to remind myself of, that from time to time I like to read. So this section here is like the appendix. It's not really part of my trading plan. It's just additional stuff. But this is my trading plan, and as you can see, it's only about 11 pages, okay? And I wrote it in PowerPoint because I liked to play slideshow as I ate my breakfast before the market opened at my desk. So that's what I did every day. Before the market opened, I played my trading plan as a slideshow, and that's why I use PowerPoint to actually do it, to write it in. If you use Microsoft Word or something like this, you could write the trading plan in 3 pages, probably in just 3 pages. So my goal is always to trade well by focusing on strategies that meet my trading plan, that are within my trading plan, and then the other part is to execute them as flawlessly as possible. So my goal is to find setups that strictly meet my strategies that are outlined in my trading plan, and work and be very careful about execution, not getting in too soon or too late, okay? And also when you're managing correctly. My objectives are, I want to have a batting average of 60% or higher, and some of you are already thinking 60%, that's just above 50% is random, right? I mean, that 60% is a no-brainer, right? It's pretty good actually. Anything over 60 is pretty good. In Market Wizards, he interviewed a hedge fund manager, and he said the best trader, or the trader that had the highest batting average, the highest hit rate, he called it, in Market Wizards, had 64% batting average. 64% only, and that was still pretty good. Sharp ratio, that means the average winner compared to the average loser. I want it to be 2.0 or more. So when I make money, I want to make twice as much as when I lose, right? And in order to get that, my trades have to have a risk to reward ratio of 1 to 2, okay? So, and the reward is the difference between your entry and your target price. The risk is the difference between your entry price and the stop price. So risk to reward 2 to 1, and number of trades per day, I average 7.3. So I want to maintain about 6 to 7 trades on average. Now, you can make money by having a really high batting average. I can figure out a way to have a really high batting average by passing on almost everything until I find that one trade that looks absolutely 100% perfect, and pass on everything else. But guess what? I will be missing out on all the other trades. I might be taking one trade every couple of days. That's might be finding one trade that's totally perfect without any issues. But I can do way better if I actually focus on the other metrics, like, you know, trades that are maybe not totally picture perfect, but have really good reward to risk, have you know, other qualities about them, right? Like timing with the market, whatever. So you can, if you want to have a really high batting average, you can. If you want to have a really high Sharpe ratio, then don't take anything, don't exit any profitable trade unless you double your money or something, unless it goes really crazy in your favor. Then you'll have a really high Sharpe ratio. But then what about the other trades? They're going to go against you and you're not going to get out. Does that make sense? So you can make money by, you can actually improve one stat at the expense of another, and you don't want to do that. It's all a balancing act. So let me show you there are 4 things that really make money, that affect the bottom line. It's the number of trades that you take, or the frequency of your trades. how much your size, the risk per trade, okay? Your Sharpe ratio, which again, the Sharpe ratio is the average winning trade divided by the average losing trade. It's how much you make when you make money versus how much you lose, okay? And your hit rate, the batting average. Those are the only 4 things that have a direct impact on the bottom line. Let me show you what you can do with just $500 risk per trade, okay? A Sharpe ratio of 2.0 and a batting average of 60%, and again, 6 trades per day. 6 trades per day, you average 60%, right? So that's 3.6. You win on 3.6. You lose 2.4. Okay, out of the 6. So per trade, the average winner makes twice as much as the average loser. So 2 risk units. My risk unit is $500 per trade, right? So the average winner makes twice as much as the average loser. In this case, 2 to 1, right? Sharpe ratio of 2 to 1. So that gives you, for the winning trades, you make 7.2 R's, or risk units, however much you risk per trade, you make 7.2, and on the losing trades, you lose 2.4. The net result is 4.8 R's times $500 per trade, that's $2,400 a day. A week, that's 12K. Per month, that's 48K. Per year, that's over $500,000. Okay, so some of you might be thinking, oh, I want to do a lot better than 60% batting. I want to do a lot better than 2.0 Sharpe. I can risk $2,000 per trade. I can find 20 trades. It's not necessary. You don't have to. If you can, then you don't need to be here. You probably wouldn't be here if you could. That's the truth. But just with these metrics, okay, with these parameters, you can actually make over $500,000 gross, let's say. There are always some fees, though commissions are, most brokers went to 0 commissions. So does that make sense? Now, I told you, those are the most important things to focus on in your trading. Let me show you what happens when any of these 4 items changes. Let's say instead of risking $500, okay, we risk $1,000 per trade. Guess what? Your result for the year doubles. You go from 576 to 1.15, 1,152,000. So from 576 to 1.2 almost. So if your risk per trade doubles, they have a one-to-one correlation. Now let's say you go from 6 trades per day to 4 trades per day. Some of you, as I said, think that, oh no, if I focus on just the 4 best trades and ignore the ones that are less than perfect, would my results be better? Not necessarily. With 4 trades a day rather than 6, everything else stays the same. $500 risk per trade, 2.0 Sharpe ratio, 60% batting average. You go from $576,000 to $384,000. That's a 33% drop. That's a 33% drop, okay, in your P&L, because you went from 6 trades a day to 4 trades a day, okay? Let's say, you do 6 trades a day, $500 a trade, but your Sharpe ratio is now 1.5. So 1.5 again means that if your risk is $500, it means you average $750 per trade when you make money. Okay, your average winner is $750. So instead of 1,000, look at the result. You go from only 2.0 to 1.5, and now you go from $576,000 to $360. Amazing, isn't it? It's amazing, the impact. So a small change in like the number of trades that you take, or what you risk per trade, or your batting average, your Sharpe ratio, just a very, very tiny difference. Look at this. From 60% batting average to 50%. That's only 10%. Okay, it's only 10%. again, you go from $576,000 per year to 360. Huge. That's over 1/3 drop in your P&L. And you reduce your batting average. You went from 60% to 50%. You see that? So those are the 4 things that you should focus on. And those are the 4 objectives that I have personally. Okay? And as you can see, you know, if you maintain something like this, you should be able to make a really nice amount of money. Now, with this one, okay, here we just reduced to 50%. So I hope that makes sense, why these are the 4 things which I was baffled when I first started, because nobody taught me this stuff. I'm a math guy, so I figured it out pretty quickly that those are the 4 things, but nobody ever told me that. And those are the only 4 things that matter in trading. In fact, I did I think a video on YouTube. There is a video that says the only 4 things that matter in trading. The title, you know, for that video was the only 4 things. So it's important that you pay attention to them. Now, your action item, list your goals and objectives. Again, keep it simple to start. You don't want to have a goal to average, you know, 20 trades a day when you're actually only taking 1 trade a day. So just push yourself a little bit initially, and then as you meet your goal, then you come up with a better goal, a goal that says, instead of averaging 3 trades a day, I'm gonna go for 4. Instead of having a batting average of 50%, I want to see if I can push it to 60%. You see what I mean? So step by step, little steps, not big steps. Okay. All right. How about the section on money and risk management? My goal is 2 hours per day, keeps the doctor away, or 10 hours per week. That's great. Of course, some weeks, months, even years, you can blow that out of the water. I mean, I did this, I'm doing this year, last year. And sometimes it's okay to have really conservative goals, realistic goals. 2 hours, that's $1,000 per day. That's not bad. Okay. Protecting profits. When unreal, you should address how you're going to protect profits. Can you be up $5,000 and then go negative on the day? How are you going to feel? It's completely demoralizing. So you need to figure out a way to protect the majority of the gains that you had for that day. Unrealized gains means gains on open positions. Like, what if an open position is up? I mean, just 2 weeks ago, I had a friend visit, and her husband is a trader, and she told me that he was up $12,000 and then went home -10. I said, I mean, she knew that was stupid, but she didn't say anything to him. And we both said, gee, what was he thinking? So again, when you have to make sure you protect the money. When unrealized gains reach 2 hours, I trail to protect gains to break even. For example, if I'm up 5 hours on the position, my stop always goes up to 3 hours, regardless of where the chart, because I trade based on the charts, regardless of where I should really put the stop based on the chart, I don't care. Money and risk management is always job number 1. So I'm always trailing my positions by 2 hours. Hopefully tighter, but that's the worst case scenario for me, okay? I have rules for realized gains. If I'm up 5 hours, because 5 hours is like my target, if I can get 5 hours a day, that's great. Then I protect 4 hours, okay? If I'm up 3 hours, then I don't want to go negative on the day. Does that make sense? I also have rules for open exposure. How many positions can you have open that are not protected? You haven't raised a stop for. And I have rules for maximum loss for the day, for the week, and what to do if they're reached. Okay, what to do if I reach my maximum loss for the day, for the week. In the past, whenever I maxed out for the day or the week, I would just go away. And if it's for the week, I would like do a weekend getaway, because I didn't want to face myself. That's not right, to just like escape. And I would say to myself, oh, I just want to clear my mind. Nope, I just didn't want to take I didn't want to face it. That's what I didn't want to do. So I have now rules to get my groove back if I ever reach my maximum loss for the week. that without having to run away to, you know, somewhere, to Tahoe, which is where I used to go. You create your money and risk management rules that you are comfortable with, actually. Okay. Entry requirements. What to look for? First, the trade has to fit a strategy that is outlined in your trading plan and has to have a clear setup. You don't want to, like, I have a gap strategy, right? That doesn't mean I can trade anything that gaps. I have to have a setup, an intraday setup, and a gap on the daily chart. Does that make sense? No anticipating. Can you get into plays before they trigger, before they actually reach your entry point? Well, maybe you can, but you have to address it in your trading plan. No anticipating it. Stock has to hit the entry price unless it's a base breakdown or the stock is on an uptick. How about re-entries? How many times can you replay the same stock? Most people are better off not replaying the same positions. Why? Because they start revenge trading. You lose on it, you play it again and again and again, and you end up, instead of taking a small loss, you end up taking a huge loss. So no re-entry. The only exception is if I lose on a play, I don't replay it. The only exception is if it's a climactic buy setup or a climactic sell setup, because those, if you're not willing to replay them, then you shouldn't play them to begin with, because a lot of times the first entry fails on that kind of setup. Now decide what will make you pull the trigger on a trade. What does this chart have to look like, feel, smell like? Okay, so you have to make sure that you have that outlined in your trading plan. And as I said, I have 3 main trading strategies: gaps for the open, 15-minute setups for the afternoon, and climactic setup for late morning, early afternoon. And I have the criteria, the entry criteria for each and every one of those strategies. They're different, completely different strategies. So I have different criteria for each strategy. Now, how do you write it? How do you write a strategy? How do you basically document a strategy? The things that have to be present, that can't be present. I came up with a way that I think is pretty workable, and you don't have to memorize it. You just have to work. You have to develop your strategy, and by doing so, you will remember it, because it will become like second nature to you after a while. So every strategy that I have has 4 different sections: the must-haves, the things that I have to have, the stock has to have, otherwise I cannot play I can't take the play, the can't-haves for the stock and for the market, and the would like to have. Those are the optional items. So that's like the icing on the cake. If I have those things, so great, so much the better. But if I don't, no problem either. Again, for the stock and the market. And then the 4th section is what I call the trade metrics. This is basically where you specify the entry, the stop, the target, and how you're going to manage the trade. If you get into a trade without knowing how you're going to manage it in advance, it'll be very hard to really manage it well. It's extremely rare for me to get into a position where before I get in it, I don't already know how I'm going to manage it, because then I'll just, you know, exit randomly. And exiting randomly, trading randomly is exactly the opposite of what you want to do to be successful. Okay, so every strategy has 4 different sections. Under the must-haves, I list the pattern requirements. What are the pattern requirements? What does the chart need to look like? Let's say it's a climactic buy setup. Climactic buy setup is when the stock drops vertically like this, and then it bounces back up. Okay, so how many red bars in a row can you have? Should you have? Do the bars need to look a certain way? Do they need to be getting progressively bigger? Do you have to have strong volume? How about the extension away from the 20 MA? Right, I have the 20-period moving average on every chart. How far away does price need to be from the 20? You see what I mean? There are certain things that you need to address and document. So that goes under the pattern requirements. What about additional requirements? What about, say, the relative strength, relative weakness to the market? What about, I don't know, the multiple time frames? What about the daily chart? Does the daily chart have to look a certain way? Any additional requirements? What about the reward to risk? So those go also under the must-haves. Now the market requirements, the climactic buy setup, climactic sell setup strategy truly is to some most, it's the most independent strategy that I trade, meaning it doesn't rely very much on the market at all. But is there an ideal market environment for the climactics? Yes, there is. Okay, let's go ahead and list the market requirements. Okay, does that make sense? But this is the only strategy that I don't really have to address the market. Okay, but for example, what if the market was, you're trying to play long, but the market has been really bullish and is just starting to break down? Should you be entering a stock that was really weak while the market was bullish, so it's diseased, so to speak, showing a lot of relative weakness in the market? Should you be entering that? So list the count house for the stock and for the market. Does that make sense? For most strategies, for this strategy in particular, the market is not such a big deal. What about timing with the market? What about, again, relative strength, relative weakness to the market? So there are many things to address, and I would like to have. For example, you see this gorgeous climactic buy setup. The stock is just dropping like a rock, and then you're seeing the capitulation. You're thinking this is the bottom, let's buy it. But then, what if the daily was just breaking down? Actually, would that be a good thing to have? The daily breaking down, or the daily failing on a major gap? It wouldn't, right? So what are some of that I would like to have? For a climactic, for example, I'd like the daily to be also extended to the downside. I'd like the daily to be printing multiple red bars in a row, so that the stock is extended on both the daily and, let's say, the 5-minute chart, which is my main time frame for the climactic buy setup strategy. But what about the market? I'd like the market to be extended to the downside, so that it exaggerated the sell-off in the stock. Does that make sense? And then again, how are you going to enter it? Are you going to play it just like jump in? Are you going to wait for a prior bar's high to get negated, to get taken out, to get breached? What time frame are you going to use? Are you going to use the 1 minute, the 2 minute, the 5 minute when you're playing climactics? So you have to specify how you're going to play the stock. Okay, and then there are two different types of climactics. There's mini and full. So as you can see, this is a business. It's not a walk in the park. I know all these fake educators out there that say, oh, this is just a walk, it's so easy. It isn't. It is easy once you get the hang of it, but you have to be very methodical, very systematic, and put in the time and effort that it actually requires. And then after that, it becomes a lot easier. It's never actually really easy. And then the stop is always low of the day for a climactic buy setup. What about the targets? Where are you going to exit? I have two different targets for climactics, right? How are you going to manage climactics? Does that make sense? So, and somebody once said, whoa, wait a second, that's a lot of things to address about just one strategy. I'm not going to remember that. Again and again, you won't need to remember it because it'll be in here. You'll know it by heart. Your brain will remember it as a picture. You'll look at a lot of charts before you develop your strategy. You'll have to, and then now you will know from that exercise. You will know what actually works and what doesn't. So I don't memorize. I don't know what's written exactly in my trading plan, but I can pretty much fill it out right now with you, even though I didn't try to memorize it. It's just because I know it. Okay, list the criteria for the tactics that you want to trade. Basically, work on writing your strategies if you know what patterns you want to trade. I have a section that's called reminders, daily reminders. I learned these from Mark Douglas, who wrote an amazing book called Trading in the Zone. It's the best book on trading psychology, in my opinion. I'm a patient person. I wait for plays to develop and only act at the right moment. You're basically talking to yourself here. These are like positive affirmations. I identify my edges objectively and within the guidelines of my plan. I predefine the risk and reward on every trade. So you don't get in before you know how much reward to risk the trade has. I completely accept the risk, or else I'm willing to let the trade go. Because if you don't accept the risk before you get into the play, then you can't take it. Because if it goes against you and you didn't accept the risk, you'll immediately get out. You'll kill the play too quickly. You might, right? I act on my edges without reservation or hesitation. Some people have they're gun shy, right? They hesitate too much, and then the trade is gone. So this is just a way to kind of remind myself to act on my edges without hesitation, without reservation. I trade to acquire skill, not for the money. You don't want to be, now of course we all trade to make money, but you don't want to be attached to a certain outcome, because if you are if you're attached to the P&L too much, then you won't see things right objectively anymore, because now you're really afraid to lose, or you're trying to get to a certain amount, a certain number every day. You don't want to be attached to the P&L. You want to trade well, to acquire skill and grow as a trader and become better. And the money will come as a byproduct if you are doing if you're trading well. Okay, if you know what you're doing, then the proof is in the pudding. The money will be your proof that what you're doing is right. You can trade whatever you want to trade, however way you want to trade it, as long as it makes money. I can't tell you it's wrong. You can be buying the stuff that I short, or sell it, or shorting the stuff that I buy, but maybe you do it at a later time, or or before I get in it and make money on it. Then you're right. I may be bearish on the stock, you might be bullish on the stock, and we could still both make money. What matters is, at the end, are you making money? And if you're not, it means you're not trading in sync. You're not in sync with the market. So, but again, I try not to focus on the money at all, and thankfully it comes as a byproduct of me doing what I'm supposed to do. I have tactical, so these are general principles or reminders. These are tactical principles. I have 5 of them. I believe that the market's biggest moves ignite from its smallest bars. In other words, explosive moves almost always originate from narrow range bars, and a cluster of small bars signifies the calm before the storm. You should commit more to trades that involve narrow range bars, as the combination of lower risk and bigger potential reward warrants it. Look, like a car cannot make a U-turn without first slowing down. Okay? So when it slows down here and you start to see those narrow range bars, that's when it can successfully have a turn. If you're looking to short, whatever, it could be also to the downside. So I always look before the turn, I always look for narrow range bars, 1 or more, could be multiple. Just like a car, it has to slow down first. So I know that the biggest moves come from narrow range bars. So I'm looking for them always. After a big move, up or down, I'm always looking for the turnaround. I'm looking for those narrow range bars because they signal the reversal. So set your action items, set your general trading principles and your strategy specific rules. You now have a solid outline. When in doubt, keep it simple and be conservative. Don't overwhelm yourself. Just work on your trading plan just in baby steps. We're not trying to, Rome wasn't built in one day, as they say, right? We're trying to be very conservative and do it step by step, so that we don't basically avoid writing it altogether, like the case is for most people. They just get overwhelmed and they just say, oh, I'll get to it some other time. Too busy now. Now, here's how my trading plan actually makes money. I call this the pair strategy. So basically, your plan is alive. It's not just ink on paper. It's actually something that you work on continuously and change over time. It gets better over time. This is where your P&L actually grows. You make more money by understanding what works and what doesn't. It's a process of elimination. I can't see what it says here. Hold on. But it's a process probably of elimination. You ever heard You ever heard the saying that trading is a process of subtraction rather than addition? You do away with the bad stuff. What are you left with? The good stuff. Does that make sense? It's a process of subtraction. So first, write your trading plan. Figure out what you want to do, right? Document in detail what you want to do as a trader, the patterns that you want to take, how you're going to go about your day, all the different sections that we talked about, money and risk management, right? And then go out and take a batch of trades of say 10, 20 trades. Put on a sample of trades, execute them as flawlessly as possible. Once you're done with that batch, then analyze the result. Figure out what's working, figure out what's not working. But again, don't just trade aimlessly. Don't just trade every day without ever tracking the trades or the results, without analyzing them. And then once you've analyzed the trades at the end of the week, let's say, right? Then figure out, make the adjustments, refine, make the changes that you think need to be made, add back to your trading plan, change your trading plan, and then repeat the process. Put on another set of trades, analyze them. It's important to analyze each and every trade, but it's really much more important to analyze a sample of trades, 10 trades of the same strategy, 20 trades. And the more active you are, the larger the sample size has to be, okay? If you take 10 trades a day, then your sample has to be probably 100 or so, or 50, no less than 50. But if you're not very active, you take just one trade a day, then maybe 10 would be enough. So again, plan, execute, put on a sample of trades, analyze the trades, make the necessary adjustments, and then make changes to your trading plan, and then start over again. Does that make sense? Somebody once asked me, what would you do differently if you had your first 6 months back? You know, if you could go back and trade the first 6 months, that's what I would do differently, is I would trade in batches. Okay, that's what I would do. That's number one. There are many other things, but that's number one. Now, in the beginning, everybody's trying to make money because it boosts your confidence, and who doesn't like to make money anyway, right? We all want to make money, but everybody is trying to make money. They just started yesterday and they're already trying to upset the next day that they're not profitable already. Does that make sense? And that's not right. In the beginning, you want to experiment. You want to go ahead and try out different ideas. You don't know what really works and what doesn't. And what I tell you works, that works for me. But maybe if you try to do it because maybe it doesn't agree with your personality, if you try and do it, it might not work for you. Does that make sense? So there are many ways to succeed in trading. You just have to find your own path. So in the beginning, don't focus on making money. Just try different things, different strategies. Of course, you're not going to be able to try them and feel okay losing money if you're risking a lot of money on each trade. So risk $5, paper trade, okay? But better than paper trade, take one share and see how it works out. So you try out different things. This is where unsuccessful strategies should go, right? Now, my final piece of advice is just do it, okay? And I know you want me to do it for you. You want somebody else to do it for you. But unfortunately, you have to do it. It's not easy, but if you're serious about trading, just do it. You can do it. You can do it. Do you want to get rich quick stock trading scheme? Well, then look elsewhere. Want unsexy but proven tips from a professional trader? Well, then I'm your guy. I'm sharing these trading methods for free in my ebook, Unsexy Trend Analysis Secrets that generate beautiful profits. This book is focused entirely on the same trading strategies that I use and refine every single trading day. Now, I'm not promising that these methods will make you an overnight millionaire, of course, but they are the foundational skills behind my many years of success and have benefited the countless students that I've shared them with. I can't wait to share my methods with you, and I know I will be hearing from you soon. Hit that link now.